something took place this morning that people everywhere need to pay attention to. It isn't only about oil prices or military maneuvers. It has implications for everyday life, things like the cost of food at the supermarket, the price of gasoline, and even the stability of the global economy in the months ahead. Events unfolding in a relatively small stretch of ocean thousands of miles away can have consequences that spread across the entire world. Energy markets react, shipping routes are disrupted, financial systems feel the pressure, and eventually those effects reach ordinary households. That chain reaction may already be starting. Earlier today, at 6:42 in the morning, the United States military confirmed that it had destroyed 16 Iranian vessels that were reportedly laying naval mines near the Strait of Hormuz. These were not standard patrol boats or small unmanned craft. They were specialized ships designed for a very specific purpose: deploying explosive sea mines in critical maritime corridors. Once placed in the water, these mines remain hidden beneath the surface, waiting for large ships to pass overhead. If a vessel, particularly a fully loaded oil tanker, moves close enough, the mine can detonate with devastating force. An explosion beneath a ship's hull can severely damage it, rupture its cargo compartments, and in extreme cases cause the vessel to sink. Naval experts have long warned that sea mines are among the most efficient and disruptive weapons in maritime warfare. They are relatively inexpensive, easy to deploy, and extremely difficult to locate. Yet their impact can be enormous. A relatively small number of mines can shut down entire shipping lanes that global trade depends on. According to U.S. naval intelligence intercepts reported by Reuters, Iran had already deployed an unknown number of mines in the Strait of Hormuz before those 16 vessels were destroyed. That means the threat has not disappeared. Those mines could still be sitting on the seabed or floating beneath the water's surface. And that fact alone dramatically changes the situation. Because removing the ships responsible for deploying the mines does not automatically eliminate the danger. The mines themselves remain hidden hazards that could trigger explosions if a vessel unknowingly sails through the area. The presence of those mines is already affecting international shipping. At this moment, not a single oil tanker has successfully passed through the Strait of Hormuz in the last 6 days. Only a short time ago, the situation looked completely different. On average, about 37 tankers moved through the strait each day, transporting enormous volumes of oil and natural gas to global markets. Now that flow has essentially stopped. The Strait of Hormuz is a narrow waterway positioned between Iran and Oman. At its tightest point, the passage is roughly 21 miles wide. While that may seem like a large distance, it is actually a very confined corridor for massive cargo ships that can stretch hundreds of meters in length. Ships navigating the strait must follow designated shipping lanes that guide traffic entering and leaving the Persian Gulf. These lanes function much like highways at sea. Under normal circumstances, around 20 million barrels of crude oil and liquefied natural gas pass through this route every single day. That figure represents approximately 20% of the world's daily energy consumption. In other words, roughly 1 out of every 5 barrels of energy used around the planet moves through this narrow stretch of ocean. Entire national economies depend on the stability of this route. Oil shipments from Saudi Arabia, Iraq, Kuwait, and the United Arab Emirates all travel through the Strait of Hormuz on their way to global markets. Tankers leaving ports in the Persian Gulf must pass through this corridor before continuing toward Europe, Asia, and other destinations. Qatar's liquefied natural gas exports also rely on this same passage. LNG shipments from Qatar are particularly important because they supply fuel used for heating and electricity across large parts of Europe and Asia. During colder months, those shipments can play a crucial role in maintaining energy stability. Because of this concentration of global energy supply, analysts have long referred to the Strait of Hormuz as the most important energy choke point on Earth. Other strategic waterways exist, the Suez Canal, for example, or the Strait of Malacca, but none carry such a high percentage of the world's oil supply. By almost any measure, the Strait of Hormuz is the single most economically vital stretch of ocean anywhere on the planet. Iran has been fully aware of that fact for decades. Iranian military strategy has long incorporated the geographical advantage that comes with controlling the northern shoreline of the strait. Military planners in Tehran understand that they cannot easily compete with the combined naval strength of the United States and its allies in a direct confrontation. However, geography offers them leverage. Because Iran sits alongside the strait, it has the ability to threaten or disrupt shipping traffic moving through the passage. Strategists often describe this capability as Iran's Hormuz card. The concept is simple but powerful. If Iran faces intense military pressure, it can threaten the stability of the strait, creating economic shockwaves that spread far beyond the region. Even the possibility of disruption can send oil prices surging and unsettle financial markets worldwide. In that sense, the Strait of Hormuz functions as one of Iran's most significant strategic tools, potentially more influential than its missile programs or even its nuclear ambitions. The present crisis began on February 28 with the launch of a military operation known as Operation Epic Fury. In a coordinated series of strikes, forces from the United States and Israel targeted Iran's nuclear infrastructure, missile systems, and key elements of its military leadership. Among the primary targets were two major nuclear facilities. One was the Natanz uranium enrichment complex, which has played a central role in Iran's nuclear program for many years. The other was Fordo, an underground enrichment facility constructed deep inside a mountain to protect it from attack. These sites have long been focal points in international debates about Iran's nuclear capabilities. In addition to those nuclear installations, several command centers associated with Iran's Islamic Revolutionary Guard Corps were also targeted. Military analysts quickly described the operation as the largest and most significant military action in the Middle East since the US-led invasion of Iraq in 2003. The following day, March 1st, the first major incident involving commercial shipping occurred. An oil tanker traveling north of the Strait of Hormuz was struck by a projectile while moving toward the Persian Gulf. The crew members were unharmed, and the ship did not sink, but it sustained damage. That incident immediately raised alarms among shipping companies and maritime insurers. However, at that stage, many observers still believed the conflict might remain limited in scope. That expectation changed quickly. On March 2nd, the situation escalated dramatically. A senior official from Iran's Islamic Revolutionary Guard Corps appeared on Iranian state television and announced that the Strait of Hormuz was now closed. He warned that any vessel attempting to pass through the area could be treated as a target. The reaction across the shipping industry was immediate. Within a matter of hours, maritime traffic in the region dropped by roughly 80%. Ship operators began reconsidering whether it was safe to send vessels into the Persian Gulf. Insurance companies, whose policies are essential for commercial shipping, began refusing to cover ships traveling through the region. Without insurance, most shipping companies cannot legally operate their vessels. By March 3rd, several of the world's largest oil tankers, supertankers capable of transporting up to 2 million barrels of crude, began canceling or redirecting their routes. Bloomberg Intelligence reported that at least 14 major supertanker operators changed their shipping plans within a single day. Some vessels turned around mid-journey. Others delayed their arrival outside the Gulf. 2 days later, Reuters reported what may be the most striking statistic of the entire crisis. The number of tankers passing through the Strait of Hormuz had fallen to zero. Not reduced or slowed, completely halted. Effectively, the most important energy shipping corridor in the world had stopped operating. What makes this situation particularly notable is that Iran did not need to deploy a traditional naval blockade. There were no massive fleets physically preventing ships from passing through the strait. Instead, the disruption was created through risk and uncertainty. A small number of attacks on vessels, reports of mine-laying activity, and the withdrawal of insurance coverage were enough to stop commercial shipping. A recent study from the Center for Strategic and International Studies concluded that Iran has been largely successful in halting maritime traffic through the strait. Even Chinese-flagged tankers are avoiding the area. This is especially significant because China depends heavily on Middle Eastern oil imports. Approximately 40% of China's imported oil comes from that region. Yet even Chinese shipping companies are unwilling to send vessels into what may now be a mined and contested waterway. That reality illustrates the seriousness of the situation. The same analysis also suggested that the current U.S. naval presence in the region may not yet be sufficient to support large-scale escort operations for commercial ships. Protecting hundreds of tankers moving through such a confined passage would require enormous resources. Naval escorts would be needed to defend against missile or drone attacks. Air patrols would need to monitor the surrounding region. And most importantly, specialized mine-clearing vessels would have to locate and neutralize underwater explosives. Mine warfare operations are extremely complex and time-consuming. Unlike missiles or drones, sea mines remain hidden underwater and cannot simply be intercepted. They must first be detected using sonar systems or unmanned underwater vehicles. After that, each mine must be carefully neutralized or removed. Even in favorable conditions, clearing a heavily mined shipping lane can take several weeks. Meanwhile, global energy markets have already begun reacting to the disruption. Before the conflict began, oil prices were trading at around $87 per barrel. Since the crisis escalated, prices have climbed above $110 and briefly approached $120. Energy markets are highly sensitive to supply disruptions, particularly when they involve a route as critical as the Strait of Hormuz. But oil is not the only issue involved. Another major concern is fertilizer. A large share of the global supply of urea, one of the most widely used nitrogen fertilizers in agriculture, normally travels through the Strait of Hormuz. Qatar is one of the world's leading producers of this fertilizer, and its exports supply agricultural regions across South Asia, Southeast Asia, and East Africa. With the shipping route effectively closed, those fertilizer shipments have also stopped. Agricultural analysts warned that if fertilizer deliveries do not reach farmers soon, crop production for the upcoming growing season could decline. Lower harvests would reduce food supply and potentially drive global food prices higher later this year and into 2027. At the same time, Iraq is beginning to feel economic pressure from the disruption. Iraqi oil production has dropped significantly because export terminals cannot send crude through the strait. Since more than 90% of Iraq's government revenue comes from oil exports, a prolonged disruption could create serious financial instability for the country. Some analysts believe the economic shock may ultimately prove temporary. Supporters of Operation Epic Fury argue that the strikes significantly weakened Iran's nuclear and missile infrastructure and may reduce long-term security threats. Others note that many countries maintain strategic petroleum reserves that could help stabilize energy markets if the disruption lasts only a few weeks. However, the ultimate outcome depends largely on what happens in the waters of the strait. If sea mines remain in the shipping lanes, commercial traffic cannot safely resume. Even if military hostilities were to stop immediately, clearing the Strait of Hormuz would still require time, specialized equipment, and coordinated international naval operations. For now, the situation remains uncertain. Mines may still be present beneath the water's surface. Commercial shipping has not yet resumed, and there is still no clear timeline for reopening the strait. What is certain is this: the Strait of Hormuz remains the most important choke point in the global energy system, and at this moment it is effectively closed.